So we're going to come to our closing, our panel number 4. This is where we're going to talk about the money. How do we finance these things, guys? And so the money map, finance in the future, is our last panel discussion. We will have a little bit of some words from Mariko Thomas from the Chamber on what's next in the partnership and collaboration. And then BEDC's Chairman Lee Simmons will give a closing. And then we will have networking cocktails and some hors d'oeuvres outside.
I'm Buddy. Did you get, is it on? Yeah, I'm Buddy Rego.
Kyle Rogers, Head of Research and Intelligence at the Bermuda Business Development Agency.
Kyjuan Brown, developer and real estate investor.
Well, good afternoon, Shivani Seth. Shivani Seth. I sit on the board for the BEDC, and I'm also the business podcaster for the Royal Gazette.
Good afternoon, Geoff Scott. I'm the CEO of the Bermuda Bankers Association.
Good afternoon, Ray Jones, Director of Economic Development Department.
Perfect. So we have a pretty auspicious panel, and if you want more details about who they are and what they do, it's in the illustrious pack that you guys will receive and look through. So, dispensing with the intros gives us a little bit more time to dive into it, because I know when we start to talk about financing and money, everybody gets excited and a ton of questions. So we'll try to focus a little bit more on maybe the action forward, because I think we spend a lot of time talking about the problem identification. Oh, can you hear me now? All right. Is it? The green light on. Tell me technically, All right, wait a minute, Tom. Just what a moderator needs. So, you want a green light for sure. All right, so hopefully you caught everything I said before. If not, I'm not going to repeat it. But we will be solution focused as much as possible rather than in problem identification, because my sense is that you've already spent enough time over the course of the last few hours talking about problem identification. But really, when we talk about this money map, we have to be innovative. As I listened to sort of the preamble from a number of the other presenters, I know Mariko talked about being innovative around the number of units that we need if we bring in 7,000 people, some 2,500 homes. So bits and pieces here and there is not going to do it. And then Mr. Campbell mentioned 4,000 homes are unoccupied. So we're talking about a very large scale, so we have to be innovative enough to kind of address those key challenges. But in the money map, what we're focusing on is the developmental financing, why that's important, what do we need to know more about, and how do you secure capital. And also, as we look at, this will be a collaborative effort, because what we have seen is that you cannot fix one problem and it identifies everything else, right? This is not a light switch that you can flip and it automatically solves. Each one is an integrated part of a much wider and bigger challenge. So we'll talk about the collaboration needed from both the private, public, as well as the individuals. And then we have to look at how do we transform and how do we come up with more creative ideas and solutions to move us forward. All right. So without further ado, we'll dive into a little bit. So as we think about this sort of initial problem set, the first thing that we start to talk about is, I'll leave this snippet because I used to be a former banker, as a debt salesman. I'll say this, right? There's a couple of challenges. Bermuda's expensive, right? The cost of labor, the cost of inputs, the cost of shipping. Anything we manufacture is sunshine and smiles. So everything else has to be bought in, and that means it comes at a cost. But if you think just on the financing side, $1 million home on 0% is $4,000 a month over a 20-year. So we're not necessarily talking about a financing challenge from an interest rate and a bank perspective. But if you think about that, and Geoff, I know you're really easy on that, so again, those need innovative solutions. So just saying, bring the interest rate down at 0% interest on $1 million mortgage over a 20-year period is $4,000 a month. So this is a affordability issue in Bermuda that we need to sort through. So as we talk about that, maybe for everybody on the committee, what are some things that we need to consider? Buddy, more specifically on your end, as we think about what needs to be done, what are some innovative ideas that we need to be considering when we start to talk about the financing pack?
Well, let me start here. First of all, being the last group of the day has good and bad things about it. The good is that we got to listen to a lot of great ideas, and a lot of people put some good suggestions on the table. The bad news is I had very little time to think of something else, because most of it I was going to say. So I will use one of Mariko's terms, and that is I'm going to set the stage a little bit, just because we're talking about affordability, and we're also talking about availability of housing in Bermuda. So as of today, hot off the press, I noticed there are 74 properties for rent on Property Skipper. My office research told me that we take about 10 of those off the market each week, and about 3 to 4 get added. So that tells you that there's significant absorption of the properties that are available for rent. Similarly, for sale, and I just did up to $1.5 million, there are about 55 homes on the market. There are 66 condominiums on the market. Last year, if you can believe the LTRO, or certainly the stats we have up to date, there were 118 properties sold. And there were 64 condominiums. So that tells you that we've got, not including above the 126,000 ARV, that we've got somewhere around 6 or 7 months of inventory for houses, and we've got about a year's supply. We sell about a year's supply of condos each year. So things are turning over very quickly. So you ask about ideas. I'm going to reiterate some of the things, because I think that repeating what has been said earlier will help those that have the power to implement change need to be reminded. And this is no particular order. Eminent domain was brought up a lot, compulsory purchase. And I think that most people today have come up with reasonable ideas or reasonableness to suggest that that is a good way to go. No one picked up what the government has done recently, which is duty relief. So construction materials have been reduced now to 10%. That is a huge, across the board, if I get that correctly. That is a huge move in hoping to, in bringing down prices. The key is going to be with that is to be sure that that duty relief gets passed on to the developer. It happens, and the right people do benefit from that. Improve planning department efficiencies. I'm not going to bring that up again. Everyone has done so. We all know the red tape and time don't work well. Another, again, Mariko, you may be happy to hear this, is the discussion on rental, the rental decommissioning of properties. We have a circumstance whereby properties on the market now owned by Bermudians that have multiple assessment numbers, and if they qualify for purchase to a non-Bermudian, they must decommission all the rental units in order for that non-Bermudian purchaser to acquire the property. A non-Bermudian who owns that same property who sells to a non-Bermudian is not required to do so. So what that means is, and we have one property listed at the moment that has 4 local residents renting those apartments, all in the area of about $1,000 to $2,000 a month. If the property gets sold, each one of those apartments have to have the kitchen taken out of it, decommissioned. The tenants will then be displaced, and they'll have to find something else. So that's something, if we want to be uncomfortable, that's something we need to address further. Along with that is the, I'm going to repeat again, is abolishing rent control. Except, I will add the caveat, with the exception of government-assisted properties, where they've done, whether it be a PPP or sponsored developments, that should apply. But we all know that renovation or new construction where rent control is going to be implemented with low returns is not going to work. The nomenclature PPP was brought up a couple times today. I think that this is the government's biggest asset in Bermuda is Bermuda and the properties that they have. And I think that if we can encourage use of government assets with private expertise, I think that we'll get a lot more efficiencies. And this can go all the way, maybe I won't bring up the airport, but this will go from roadways or airport to telecom to housing. And I think that there is great opportunity there with various models I'm sure especially bankers would be aware of that we could take advantage of, whereby private expertise could help with utilize the assets that government hold.
I don't want to get you to provide all your details at once, buddy.
Okay, well,
You
I'm
wanna
just
say
going.
something?
No, that's all right. Well,
We can scatter you throughout the panel. You have a lot to offer there. but-
well, okay.
Hey,
Oh.
anybody want to add on it? Because
Go
what we're
ahead.
really talking about is a supply side issue, right? Because historically, Bermuda's always been talking about the demand side. Go and get a loan because this house is available. But right now, we're really talking about supply side issue. From the panel, anything else to add from your view on how do we address the supply side issue? Okay, buddy, you look like you're. no.
Okay. How about this? I'm going to touch on one more efficiency as relates to commercial properties.
Okay.
I have heard discussion before that, and we all know this because Hamilton has particularly small lots of land. And redeveloping small lots of land on small footprints is very, very expensive. And those of you who have looked into commercial developments will know this to the extent that it would make a lot more sense if there were incentives, and that word can go a long way, incentives to allow neighboring properties to join together for economies of scale. I know this because I've been approached with this idea myself, and I think that, Brookfield is a prime example of what actually is not one single property. It was an amalgamation of a number of properties in order to make that work for them, although they're owner-user, but for the most part. But that would be something that we could look at in the City of Hamilton plan. Certainly those, we don't have a lot of derelict properties there, but where there are, join the properties together. EEC would be a prime example of that.
No, I just want to add to that because I do understand the supply issue. Similar to Hamilton Princess, I had to do the same for my practice. When we're bringing in staff, nurses, etc., we had to buy properties in order to house them because there wasn't anything on the market, and that was messing up the whole HR process. But as we was going through that exercise, I have a number of our properties in the EEZ zone as well, and those height restrictions have been lifted, but they haven't been lifted in the general community. So as we know, in Bermuda, we do have limited land. So there isn't limited sky, and we have to start to allow heights in some of these areas, kind of ease up the restrictions of setbacks. I'm doing a development now that's outside the EEZ zone, and the units and everything becomes significantly smaller because I have to do 10 and 15-foot setbacks, which it doesn't make sense when we're trying to increase our housing stock, and I have to now decrease units, and also due to other restrictions of parking, etc. One of my developments was going to be geared towards seniors. Many of them don't necessarily want to ride a bike or may not even want to drive a car. They will catch the bus. They're more on the bus route. So all those types of considerations and nuances around the development have to be considered, because if I was to eliminate those 25 parking spots, I can put up another 15 units and increase inventory that way.
Interesting. And Kyle, you want
I just wanted to touch on a point that Buddy made. I was at an infrastructure conference in London in September, and I was shocked at the amount of interest that these asset managers such as Brookfield have in terms of having access to infrastructure projects such as bridges, roads, hospitals, because they generate a constant cash flow for their investors. And so I did want to touch on that point again, that it's a really interesting option for Bermuda. And I came back and we had a conversation, Rego, about it. There are plenty of different ways to skin this cat. And it doesn't always have to rely on our government, which when I say government is us. We're the investors. When it's the government, it's our funds. So having other private investors invest in our infrastructure is obviously another option that we definitely can explore, and there's a lot of interest in it. So,
Yeah, poor cat, if we're skinning it. But just on that point, Kyle, maybe it's good to expand a little bit, because we've been talking a lot about foreign direct investment. Maybe between yourself and Ray, maybe cover off, how can we develop more programs? What does that look like to encourage foreign direct investment, and what's already being done?
You already had a turn. Let me get a little word in. For me, I'm going to talk about time. For me, as a financial person, time is money.
Yep.
And listening to everybody in this space, time is a very big impediment to how successful any development project can be. So I'm going to put my governmental hat on, and I'm going to start with just a basic word of willingness. Willingness to change. So we got to be innovative. Our processes need to be transparent and digital. We cannot have it touch 10 people. That's time. We can write code into the digital process, so a complete application. So my colleague Vicky her staff doesn't spend 90% of the time dealing with an incomplete application. If we use innovation, that application doesn't even reach our desk because it's incomplete. And the system will tell the consumer it's incomplete. So all of a sudden, we can improve the time aspect, because time is money. But it takes a willingness. So when you're ahead, I hope people don't get too upset, I call it institutionalized governmental working mentality. It's difficult to be willing for change, because people are afraid they might lose their jobs. You don't lose your jobs. We just redirect the human resource where innovation can be used. But we put the innovation into this forum today. Time is money, and we need to adapt innovation so we could decrease the time and improve what I call the bottom line on these projects. So that's my initial input.
No, that's perfect. No, thanks, Ray. And it's an important point. And I know protocol's already been established, but we have a minister sitting with us. So I know he's pretty keen on getting rid of red tape as well. So nobody needs to run out at this particular point. But yes.
But Neville, you mentioned foreign direct investment, and
Yeah.
so I wanted to spend some time talking about the Bermuda Business Development Agency, which I'm not sure that everybody is familiar with. But we are the investment promotion agency for Bermuda. And what that means is we're tasked and responsible for generating foreign direct inward investment into Bermuda. And there's a number of ways that we do that. We do that through brand awareness, so being in markets and telling them our story of Bermuda, telling companies of why Bermuda, telling that story, and then being at conferences and events and trying to generate interest in the island in that way. After that point, once companies have decided that, you know what, this makes sense, we also have a facilitation process, which is our concierge that is free to the clients. All of this is free, where we can connect the clients with the service providers and folks that they need to actually establish their presence on an island, which is phenomenal. Our feedback is always, this is free. So we're very proud of that, and I'll come back to that in a second as to why that's important. But then finally, there's a portion of aftercare which involves advocacy as well. So that's why we work very closely with Ray to talk about this. This is the feedback that we've heard. These clients are having a hard time with X. And so we capture that information. The reason why the concierge program is so important is because there's a policy that was drafted by the government in 2021, and it's called the Economic Investment Residential Certificate Policy. And what that allows for is for investors that are investing at an amount of over $2.5 million or above in specific areas, but for this forum, we'll talk about real estate, but they can invest in new business or established businesses, charities, and a number of other things. And the BDA offers a white glove service for those clients and helps them to put their applications together, vet that application. They know exactly what they need in order to put the application forward. That's then presented to the Minister of Economy and Labor, completed, second check, stamped, and given back to his clients within, generally speaking, about 5 business days. What's great about that program, and you're talking about, generate more foreign direct investment, is that while we're promoting Bermuda, we're also promoting this program. And also the clients that we deal with are also promoting this program to their clients. So, for example, there's some green shoots in, say, an Azora project or a Nautilus project that are requiring secondary investment in order to complete their projects. They're taking this program and they're also promoting it and promoting Bermuda at the same time. So I think more programs like that. We have a Tourism Investment Act that I think allows for concessions, and I think we're on the agenda to talk about that a little bit later, but more programs such as that, a Business Investment Act, or a fast track 114B application for EIRC holders might be other things that we can do to increase investment.
That's a lot of alphabets. Just let everybody know what those 2 things are.
So, as everybody, I think, is aware, there's a 60-40 requirement for ownership in Bermuda. I would say that investors that I've talked to have 2 things. They want to be able to invest their capital easily, and also have the opportunity to exit and understand what that is. And so with having
the 114B.
This is the 114B. So having a arranged marriage, let's say, without a prenup, for some investors, you're all right. For some investors, it's scary, and some investors walk away without having that safety and security of knowing that their capital is safe and secure. So.
Perfect.
Yeah, 114B allows for the exemption of the 60-40 rule.
And I think it's a good transition on that particular point, because Shivani, I know when we were talking about this, we sort of view this in isolation, that this is a local problem, this is a government problem, but we see that international business probably consumes, they have about 8,000 people on island, and doing the sort of quick math that Mariko talked about earlier, that probably equates to 2,000, 3,000 homes. So they are also part of the challenge around housing as well. So maybe if we're talking about collaboration, how can international business get more involved in the part of the solutioning for this challenge as well?
Yeah, thank you, Neville, for that question. So just to step back for a moment and tell you, as the business podcaster for the Royal Gazette, my remit is actually to raise Bermuda as a jurisdiction of excellence, which I will say that is exactly what it is. So each month is about giving people in the outside world an insight on what we do here in Bermuda, what we do best, and why you should actually bring your business to Bermuda. So that's for a starter. Again, just to echo, as we've said earlier, a lot has been discussed about what the problems are here. So really, I wanted to offer a solution to you today, something that perhaps some of you may have thought about, some of you may not have thought about. But, as we know from the recent budget, the Bermuda's GDP growth in 2024 was driven predominantly by the expansion in the IB sector. So I am a firm believer that we need collaboration into building a stronger Bermuda from every aspect. Today we're here talking about housing. So if I could present to you an example, so if we look at the UK for a moment, the government, the regulator, and the pension industry have collaborated to increase the investments in the UK infrastructure projects. So I'm not sure if you're aware of that, but it gives us an example of what we could do over here. So just bear with me as I explain that to you. If we talked about collaboration between the BEDC, financial institutions, and developers on our call, Neville. Mm-hmm. But I thought of another person, another body that we could add to that, and that would be the BMA, the Bermuda Monetary Authority. So we could form a partnership with the government, the BMA, and the long-term sector to increase investments in the BDA infrastructure projects, such as housing, and it could go on beyond. So in the UK, they have the PRA, which, again, lots of acronyms. It's the Prudential Regulation Authority, the equivalent to the BMA. And they've introduced the matching adjustment regime, which came into force last June 2024. So this regime essentially makes sure that assets are matched with liabilities with a similar profile. So if I ask you here in Bermuda, what is the one sector within IB that's actually showing most growth, it would be? Anyone? No one. Life. It would be the life sector. So the long-term sector has seen huge growth here in Bermuda and will continue to do so in the future. So long-dated liabilities matched with long-dated assets. Real estate is a long-term asset that can be matched with the long-term industry, which is growing here in Bermuda. So a further example of this could be a long-term insurer taking on an infrastructure project in Bermuda, such as housing. They could mix it with commercial and residential use, and in return, they can use these assets to back their liabilities. The BMA could in turn lower the capital charge rate for the IB company because it will be building a Bermuda infrastructure project, and therefore we would encourage investment here in Bermuda. So the BMA essentially does want policyholders' interests to be met and protected. So is this perhaps a win-win solution for all? So in conclusion, as I know we're always running out of time and wanting to get to the drinks part, collaboration with the BMA, the long-term sector, I think this is really a great way to begin and a fruitful discussion to begin. Thanks, Neville.
That's excellent, because that will definitely sit in our recap as an action item that we can take away. So I know, Dr. Brown, you may have some other items that you may have to attend to, so let's kind of bring you forward. You're a real estate developer, but you're really a doctor. Mm-hmm. And so using both your knowledge and experience around your medical practice, seniors is becoming a big issue, and we're sort of challenged with them at the hospital. We've even got room numbers for the hallways. So as we start to think about developing seniors housing and the like, given both your experience on your medical side as well as your development side, what ideas can you kind of think about that can help us with that without giving away your trade secrets? So.
Yeah, of course. Thank you for that. So, I think as a physician, we're problem solvers. And so naturally, I bring that in every industry that I enter. As it pertains to housing, as I mentioned earlier, one of my desires was housing for seniors and those who may be a little bit more economically challenged than others, right? And as we was going through that whole exercise of getting the drawings, doing the feasibility studies financially, we realized that the cost of construction has gone up exponentially, almost doubled for some of our projects, and that there is a cap on financial assistance for these individuals who are in most need. And as I mentioned on our call, the math just doesn't math.
Right.
You can't develop a now $15 million building and then rent it for $1,850 for a unit. It's just not going to work. You're not going to get the ROI, and it's going to be so tight if you do get a little bit of something that no one is going to even lend to you, which was the problem that we faced and had to get creative in order to make these projects come forth. And some of the creativity or the creative ideas were, how about we go back to the old way of doing things in Bermuda, the concept where there was a bartering system of sorts. And now it's called, co-investing with tradesmen, getting these guys who are experts in their trades, getting them involved. We cover the cost of equipment and supplies. There's a discount on labor, and that discount on labor gets put into equity in that particular project. And so they become vested in the project because they're going to be getting dividends for life and for their successors. Another structure that we had to look at was also REITs, Real Estate Investment Trust. There is some challenges around doing that formally, as they do in the States and other jurisdictions, but you can get creative, once again, using trust, forming a trust, having beneficiaries of that trust or companies, etc., and getting others to invest in that project. Because one of the mandates of my family was to, how do we allow others to have access to the economic pie through real estate investing, which has done very well for us for a number of years. And that was one of the bright ideas that could be developed here in Bermuda. I know the government was expressing interest through the BEDC. I think the name is now changed, through the approved residential schemes, and then that opens up guarantees of which maybe there may be access to pension funds for these guaranteed projects, because we know real estate investment, there's quite a significant return and consistent return, and sometimes it beats some of my equities in other markets. But another option that we need to, I'm thinking outside the box, is crowdfunding for smaller projects, if you will.
Right.
And the like. And that's where we had to pivot in order to make some of these projects a reality due to bank financing, the requirements for down payments, et cetera, the requirements for securities, and then all the other red tape that you need to jump around outside of that of planning.
Perfect. And I think that's an excellent lead in, because this panel is called the money map. And I've seen people walk out probably because they haven't heard about that as yet. And so we'll save the best for last. So Geoff, you're representing the Bermuda Bankers Association, and I'm sure there'll be a lot of questions around financing, but maybe start, because I think Dr. Brown raised a good point around programs that may be already in place. And I know the Bermuda Bankers Association do have some programs that are available in that regard.
Right, yeah, thanks, Neville. So, again, good afternoon, everyone, and thanks for the opportunity. I'll try to keep my comments short so that there is time for some questions at the end, but in Bermuda, there are two programs I would highlight, and they're both examples where I would say that social policy is mixing in with commercial interest to make things happen. And so the first one is more on the demand side, and that's the program offered through one of the banks here in Bermuda, which allows that bank to lend up to 90% mortgages. That would be for buyers getting into first-time homes, and 90% financing helps address a little bit that affordability issue that we were talking about. Doesn't really bring down the cost of anything, but it at least, by providing that little top-up guarantee, the government has allowed that bank to lend a person a little bit more towards, or your equity requirement is a little bit lower. And that's had some positive traction. The program's only been around a couple of years. Neville knows it well. And it has had actually some traction. And I think, even if it's in the tens of families that are now in homes that weren't before, that's a good thing. On the supply side, and it was just referenced, in the economic empowerment zones, this was a little bit more of a complex project to work on, but the banks, 3 of the 4 banks have participated in what's called the Approved Residential Kickstart program, which is, again, a government guarantee program for developers. And this is in the economic empowerment zones. This is a program where the government will actually put its guarantee on development loans for projects, either new build or reconstruction, renovation of old properties for residential purposes. I would want to stress that the point of that guarantee isn't to make an uneconomic project economic. It doesn't take a bad project and make it a good project just because the government has slapped on the guarantee, and the banks are still making lending decisions, as they should, based on the underlying project itself. What it does is it allows the banks to lend at a lower interest rate. It's really a pass-through of a cost savings that the banks have on capital when a loan is guaranteed by a government. So what that does is knock a couple of % off of the cost of a borrowing, and that we often hear the comment in Bermuda that the cost of borrowing is a challenge in construction. I would say it's a challenge, but as has been talked in a lot of detail today, it's probably not the main challenge when we look at the cost of construction. I would say that a good project will still work at a slightly higher interest rate or a slightly lower interest rate, but every bit helps. And that social policy, the reason for that Kickstart program was that specifically in the economic empowerment zones, government policy was that they'd like to encourage that type of development in those zones, and so this is a bit of an assist to developers. Neville, if I could, I have the benefit of working across the region. I'm actually from Barbados. I don't sound it, but I would just say along the same lines of how government, sort of thinking forward, in Barbados, the green economy is a big priority. So there's a lot of focus on solar and energy generation and so on. A creative program that the Barbadian government came up with, which didn't cost them anything at all, is using, now of course there's a bigger supply of raw land in Barbados, and so some of the raw land was donated to allow residential developments to be built for low income and lower middle income families. The land was contributed to the buyers and so a buyer doesn't have to put anything down to get a mortgage from a bank. The bank's looking at the land as 20 or 25% equity contribution in the project, and the government is putting solar panels on the roofs of all these houses and has a 20-year lease on the power. So they get the solar power that's generated off the roof as if you like, long-term compensation for providing the land up front. The family gets into the house without having to put any down payment, and assuming they qualify for a mortgage. Another example of, and that deal, by the way, is arranged again between government and some of the banks in Barbados. So another example where public policy and financing can actually be brought together under an umbrella, and I think it's to the point you made right at the beginning, Neville, partnerships. In larger market economies like Canada and the US, you see things like mortgage insurance and that's offered by governments to help banks that are making aggressive loans keep them stable. And sometimes the policy objective is just making sure that banks never go back to what happened in 2007. I'm sorry to even raise it, but real estate was a big part of the problem back in the last financial crisis in various forms. And that's why you have banks being conservative now, but also policymakers being conservative about how banks are regulated. We're in a small island economy here. It's a tightly regulated market here. I always want to make the point, Neville, and it's part of my job at the Bankers Association, just to always say that you have 4 banks here that are competitive. And I will always say when it comes to access to financing, because we hear this a lot, it's a great idea to go and talk to at least 2 banks on everything you're doing. That's in your personal life as well as your construction, development, and takeout financing. There is a competitive market here, and there are differences between the banks. So all of these factors kind of play into addressing affordability, availability, and then ultimately the success of bringing at least debt financing into these projects.
That's perfect. Thanks, Geoff. And there's a number of bankers in the room here as well. I hear scoffs already.
Neville, can I just jump in one, just to follow through on that? I've had a couple of discussions with bankers recently, and which I think is great news, that the LTVs now for most banks, BNDB and HSBC, are 80-20, which is a huge improvement, so that 20% down is better than it used to be at 30, and of course BCB at their 90-10, so that's a huge improvement.
Does everybody know what LTV is and how it works? I'll look for heads nodding if you don't. Okay, because LTV is loan to value. It means you want to create a little bit of a gap between the value of the home and the amount that you borrow, and that's important, because in the event that you're unable to pay, then the bank has the ability to sell the property before it exceeds the margin between the value of the home and the mortgage itself. Okay, same heads nodding. So only for the bankers in the room, we love those terms. We talk at cocktail parties, but ultimately we're debt salesmen, so we want to lend money, right? So we're almost spot on 10 minutes to allow some time for questioning. We have some other questions if you're a mute audience. But any specific questions? Oh, right at the back. Yes, far away. Yeah,
Neville, if I could, while that question's being
Sure.
posed up, I did have some stats that I failed to talk about earlier, which also might help with the questions. But in March of 2021, Minister Hayward spoke about the Economic Investment Residential Certificate Program, and he said, imagine if we can get $100 million in 10 years in investment in this program. We're 4 years in, and we're at $573 million of investment. just under half of which is in real estate investment, and the rest being in business investment. So it's been a successful program, and it speaks to the energy that, and this is organic. We haven't marketed the program so much, but a lot of this real estate investment is from folks who came here during college weeks back in the 70s and kept coming back and got married here, and so have invested in real estate and have made this their retirement home and plans for retirement. So
And decided to stay after COVID.
yeah, and some as well. Yeah, some as well as the work from Bermuda program. So just a little tidbit for, and again, that's 173 new residents that are in Bermuda as well.
And people don't really understand the knock-on effect that has to GDP, right? Because that means 173 million spent, but that's groceries, gas for the car. I don't want to, smoothies, whatever it is that you buy, KFC, what have you. But anyway, the question right at the back.
Sure, yeah, thank you. There's a question that I've been struggling with that I've not seen in any other country, where I believe right now the cost of construction in Bermuda potentially is equal to or exceeds the sales price of the property. So if you were to construct a condo today, the cost of constructing that condo will be more than what you can sell it for. I've not seen that anywhere else. And I guess what implications does that have for the bankers in terms of the value of collateral, the movement in that LTV, access to credit? Because to me, that's a pretty fundamental issue.
Yeah, it's probably Geoff and Buddy.
Well, I actually think in that order, right? Because my answer is going to be that it's probably less of an issue for bankers, because at the end of the day, bankers are looking at a whole package of collateral, cash flow, who's the customer, their experience, and a range of factors. And banks are putting in a portion, but not the risky portion of the capital for these projects, not the equity portion. So perhaps over to one of my colleagues here to talk about that, because I think that's where the impact is.
So Neville sells debt and we sell houses. And I think that to your point, it's really critical, because I think that Bermuda, and this is not a sales pitch, is actually one of the most undervalued destinations or domiciles in the world, in the modern world. And yes, you're quite right. I mean, there are a number of buildings. In fact, some of the commercial activity that's happened in the recent years have demonstrated that, you can buy properties here for less than replacement cost, and that's a fact. And that's not unusual even in the residential sector, with the exception of new build, because what we're seeing is that people want newer, modern bells and whistles. But if it's dated, if it's old, without a shadow of a doubt, you've got a property that is less than what replacement. The market value is less than replacement value. So it is a very unique situation for Bermuda.
Yeah, and as we talk through that money map, what we haven't talked about, we always focus, and it's probably a primary focus in Bermuda, is that all financing is debt financing. So there has to be an equity composition. We've talked a little bit about some of the partnerships that might be available in that regard. But Bermuda is one of the very few places where most development, most activity, even on the entrepreneurial side, is primarily debt driven. When we probably need to start to talk about, which is probably another seminar for another day, is how do we generate and create equity? Yes, Penny. Yeah, let it not be said that you're quiet, Penny.
Thanks for that introduction. Thank you all for being here and doing this. I wanted to do two things. One is I do have a question, and the other is to also add on to something Buddy said about the LTV being 80%. That's predominantly on residential. On commercial, because Rachel and I heavily do this, we tend to see 60 as the LTV, which means really for commercial buyer or developer, they have to come up with almost half of the cost, because you've got friction, all that stuff that comes with it, the closing costs. So that's a harder proposition for someone looking at a commercial development. It takes a lot more capital to be able to step into that arena. I don't know if the banks are thinking of doing any movement on that.
I see Jody sitting right there, and I think he'll tell you that it's BNTB, because I had a conversation yesterday, is now 65.
Oh, great.
Okay, we'll take that. We'll take that. He's a gambler here.
You can't beat the customer support. So
Okay.
maybe a quick segue just before you dive back in, Penny, on why the loan to values are the way they are. And this is boring stuff, so please stay with me. Typically, those LTVs or loan to value are driven by the capital set aside a bank has to put against a facility like that. Commercial facilities have 100% capital set aside in certain circumstances. That means for every dollar a bank lends to a commercial building entity, they have to set aside capital of $1, right? So they're 1-to-1. So that could be very expensive. Now, Shivani raised a great point because she talked about how we could have conversations with the BMA about getting some potential relief on that capital side. So that's the reason why. The other is, and I think we talked a little bit about it in Giovanna's presentation about what it looks like when these commercial buildings sit for a long period of time and have high developmental costs. You alluded to it, Neil. We're talking almost, and somebody correct me if I'm wrong, $1,000 a square foot, right? That's a very expensive proposition to build. So you start to get into double-digit millions for financing on commercial buildings. So that's just to give a backdrop. Not to get any excuses for the bankers, we're not looking for sympathy, but it's just to give you a sense for why the charges are the way they are. Sorry, Penny.
No problem. Thank you. This question is directed likely to Kyle or Dr. Brown. We are seeing more of our commercial tenants who are non-Bermudian coming here who are interested in investing more like a loan. They've got the capital, they don't want to live in something, and they're looking for it to be effectively like a loan, which is almost competing in the banking arena. But they're coming up asking me, hey, do you have anything or anyone who needs a loan for, $5 million, say, or to invest in something? That will then turn into them helping out Bermuda or Bermudians and gives them some status like the EIRC does. Thank you.
Well, if you have those clients, Penny, I'm going to see you after this conference because, yes, we need their $5 million. And we'll say thank you very much on behalf of Bermuda. But, yeah, I think, when do you know about these type of opportunities, right? There's no forum other than this, which thank you for having. But for us developers out in the community, these types of things are, where do you find them? Also, interestingly, hearing from your organization of how you go out and beat down the doors for Bermuda, there needs to be some sort of way of connecting them to us who are on the ground who are trying to develop these projects in the interest of Bermudians.
Yeah, I do know that BEDC does, in some way, shape, or form, not put more work on your plate, Rego, but to develop programs where you're trying to match investors into developers and the like. But
and I was going, Penny, to offer that as an alternative option for folks to debt-driven sort of solutions. In that, as I mentioned, there are other capital projects that are happening in Bermuda where they're going out to potential investors and saying, hey, we have this program in Bermuda that you can actually get something from if you invest into Bermuda. You can become an indefinite resident in Bermuda if you invest in my company or be a part of the project that we're trying to put together. So for everybody that's listening today, I did want to have that as a story and also a tool in your tool belt in order to try and find new capital partners in projects that you're trying to put together. And the BDA is the place to connect with those potential investors.
Would it be possible to ask the gentleman who assisted with the underwriting the hospital debt, and that program you mentioned earlier on, how that can be dispelled?
Eric?
Where is he? Oh, there he is.
I probably don't need a mic. Can everyone hear me?
Yeah.
So there are a couple of things that, going from easiest to most difficult. There are 4 or 5 events in North America that Bermuda historically has not attended that it should attend. One is the annual U.S. Export-Import Bank Summit, which brings equity investors, developers, governments, contractors, EPCs, the whole bit, and it's usually 3 days, It used to be 4 before the pandemic. It just occurred last week. It's every April, every year at the Omnishoram Hotel. That's number one. Number two, the World Bank spring meetings brings finance ministers from 240 countries, again, to Washington, D.C. every April. And those finance ministers all have sovereign wealth funds that they're looking to invest outside of their countries into a safe jurisdiction like Bermuda. But you can't be there unless there are people to press the flesh. And currently, other than me who loves Bermuda, there's only one person who ever attends, and that's Anthony Howell. Used to be Cheryl Packwood, but that office sat vacant for 7.5 years. Number three, there's an annual conference that the IFC, the International Finance Corporation, which is part of the World Bank, holds called IMPIA. Now, a lot of times, I tell my staff around the world, where do you fish? Where the fish are. So if Bermuda wants foreign direct investment, and historically it hasn't wanted foreign direct investment because it's a wealthy country, you got to go where the countries that are looking for foreign direct investment go. It has nothing to do with relative wealth or anything. So the IMPIA annual conference has the top 1,000 private equity firms looking for good deals. So even when I moved here, because my wife missed home and we moved back here so she could practice her medical practice, I sat in my office at Green's Guest House and I just talked to dozens and dozens of PE firms and multi-billion-dollar companies, and I had them flooding in here just because I love the country, and that's how we supported 4 or 5 of the different hospital bidders. So the issue is really getting the Bermuda word out. The last thing that I would offer, and that's just my love for this place, Shivani mentioned a program in the UK, and sometimes Bermuda is a little slow to emulate best practices in this regard. The firm that I'm a partner in, we were the first advisory firm to take a local real estate developer to use that program, and we did $1 billion worth of affordable housing in the UK. So I say all that to say there are people out there and firms out there that are readily willing to do business with Bermuda. But I think Bermuda shouldn't rely on the British Embassy in Washington and shouldn't rely on some of the UK things, and get out there and have roadshows, not just of government officials, though they are lovely, but bring your 20, 30, 40 largest, I shouldn't say largest, most eager people like Dr. Brown and whomever else, that when the finance minister or any of these ministers travel, you bring your delegations with them. Every April for me is both exciting and horrific, because my firm, all we deal with in the month of April in Washington is all those business delegations looking for capital for infrastructure projects, which we fund. They come when their ministers travel to the World Bank meetings because they're looking for capital from U.S. banks, from U.S. equity investors, and whomever else shows up. So I think Bermuda isn't, because it's such a wonderful place and spoiled with its wealth and talent, isn't as desperate or aggressive in terms of singing the gospel of what it is to invest in Bermuda. And so I think some of it is just a public affairs issue and a diligence of getting out there and selling the story. I would love to have this same one. If you said, Eric, we can do a roadshow and do this same event in 25 U.S. cities, it's not going to be $575 million. It'll be $5 or $10 billion. Because if we did LA, New York, Chicago, I won't bore you with the cities that we could do, but there are U.S. investors that when they find out what a safe investment Bermuda is, $1,000 a square foot really isn't their issue. Their issue is safe alternatives to the United States for investment with high returns.
That's perfect, Eric. Thanks. And Ray, I'll leave that action item with you. I saw you Googling these conferences, so I'll leave that particular action item. Thank you, Eric, for raising it. Now, we're going to get gonged off pretty quickly because we're well over time. Probably one last question or a couple more questions, maybe 3. Maybe. All right. Fire away, my friend.
One hopefully quick one if I can. And thank you everyone for a very, very interesting and educational panel here. This question I think dovetails as well with Geoff Scott's comments. And a great discussion around attracting new capital to Bermuda. But what can we do perhaps to incentivize other commercial entities that are here already to engage in these same forms of security for infrastructure development? We do a great job when we are overseas sometimes of singing Bermuda's praises, but internally here we aren't necessarily taking stock of how safe of an investment Bermuda really is. What more can we do potentially in such of the models that Shivani had brought up to encourage local entities to put capital behind their own investments?
There's probably 3 people that could tackle this between Kyle, Shivani, and Geoff, but Oh, Ray too, sorry, yeah.
A really quick answer to that. I think what today has proven is two important things, and that is one, communication, and two, collaboration. So to answer that would be my answer. Other than that, we can sit down and have a chat afterwards.
That's perfect, Ray.
No, that was pretty much what I was about to say. I think we can do a better job of informing our residents. I think we do a great job, Carl and his team. I shouldn't say Carl and his team, the BDA, the EDD, the BEDC. We've been working very hard to become Team Bermuda, so we are doing a great job in selling the jurisdiction. But I think taking care of our local investors and informing them, and that's where I think that responsibility will rest with my department, the Economic Development Department, to make available the information, all the various concessions and incentives, but also the government is open to creative ideas. So there were some great ideas mentioned today. My office is where you come. We have a meeting, and then we document that, formalize that in a proposal for the government to consider as a new incentive or potential concession.
That's perfect. We have one question in front.
Thank you. This was incredibly helpful and informative. My question actually is springboarding off of what you said about entrepreneurs and the tendency to go straight to debt in terms of raising capital, and to you, Dr. Brown, as well, just looking at different sort of avenues for raising funding. I think I'm looking at this more so from both a mindset and a preparedness. So if we're talking about, a smaller developer or even an entrepreneur looking to get into it, what are some of the gaps you're seeing as financial advisors for why you do not want to necessarily back outside of a debt scenario? Because I think that there is a gap between skill sets that people have in terms of raising funds or knowing how to approach an institution versus others. So I'd be interested in understanding, what is that gap and even how could that be addressed for people?
So maybe I'll take the beginning piece and then I'll chuck it to Geoff. There have been a number of what I would describe as equity programs that have been launched in Bermuda. I think at the time, Bank of Bermuda, HSBC had Compass Venture, Butterfield had VenCap. And I think what it ended up being is an education process. People didn't understand what equity meant. They said, well, I'll pay back during the summer when things are going well. But that's sort of a different financing structure rather than equity. And so you're participating when things go well. The other piece that we have seen as well is because of the regulatory environment, you have to be a sophisticated investor to be able to participate in some of that equity. And what that means, loosely, I can think of the two criteria off the top of my head. You have to have a net worth greater than $2 million, not including your primary residence. And you have to earn somewhere between $300,000 and $500,000 a year on an ongoing basis, right? So that immediately takes it away from somebody that may have some investable cash but may not be considered a sophisticated investor. So you're in a place where those types of investments, because of the regulatory environment, are not going to allow the retail investor, I would say, to participate. So that's being worked on, it's being looked at. But maybe, Geoff, from your perspective as well.
Well, I think what I would just like to sort of add on to what you're saying and not change the subject, but say that when, from a bank's perspective, and we do hear this a lot actually, that it's difficult for a first-time investor because you're thinking about things from your perspective and you're thinking about this property that I found that I could do something with it and I want to invest in it and make lots of money. And from a bank's perspective, this is actually their day job. This is what people do inside banks. They look at real estate projects, they evaluate the merits and then whether or not a loan can be given against that project. And so there's a mismatch going on here, and it's a little bit about education. So having forums like this and others where we can talk a bit more about the process, what appears from the outside to be a very intimidating or unknown process, from a bank's perspective is something they do every day. And I think we do need to work more on the collaboration and making what is really, from a banker's perspective, not a difficult process at all, less intimidating and perhaps a little bit more clear up front. One of the great examples here is a person will come in with what they think is really a fabulous idea, but really the numbers are sketched out on a a little piece of paper in pen, right? And that's not a criticism, actually, because that's often, to you as an investor, good enough. That's your business case. But for a banker who's looking for, and usually does get, financial statements and some good projections, if you're doing a renovation of a property, proper cost estimates, and I'm just giving some examples, but these would be things where your banker is actually your friend. It's not your banker, he or she is not is not the opponent here. This is the person who actually wants to help make this work, but there are sort of standards, and there are good ways to do it. I always say relationship is the best thing you can have in a bank, better than having a big deposit at a bank. It's to know a person in a bank, have a relationship with your banker, and get some advice. There are also financial advisors in Bermuda that also do these things, but education, demystifying the process, which I really don't, and banks really don't like to hear that it all comes down to process, because it shouldn't. And then being open to have those discussions, which is really what a good relationship is all about. Having a relationship with your banker, realizing that not every idea that you bring is going to be the best idea for a bank, but some of them will be.
That's great that the banker was able to wrap up the money part. And so I did promise right at the beginning that we'd go back to have some action-oriented items, so I took some scribbled notes. We talked about building up, not out. We talked about how to address the supply side issues. We talked about making sure that we're more visible and present with foreign direct investment overseas. We talked about the partnership. There's some more to do with international business, as well as working with the BMA and others. We talked about the co-invest model with tradesmen, which is a great idea from what it used to be back in the day. We talked about all the schemes that are available, maybe a little bit of education that's required in that regard. And then we also talked about how did we look at this sophisticated investor model and make sure we can, for the want of a better word, dumb that down a bit so that it could be more available to all retail investors. So thank you, panel. Excellent stuff. Well done. And thank you, everyone.